You guys asked for a margin video, and I'm going to deliver you the best margin video on YouTube. The stuff that nobody is going to actually tell you because they likely just don't know about it. I've been making so much money trading on margin. Margin can be a very dangerous thing though, hence why this video is going to go into great detail how to take advantage and use it properly so you do not get burned. If you leave a comment after watching just 2 minutes saying this is dangerous and Henry is crazy, then you clearly don't have an attention span capable enough to be a profitable trader to begin with. Just being completely honest with you, okay? I'm going to go deep into risk management. Here you will learn importance of risk management when trading options on margin. Because if you don't get margin correct, you are going to lose money. But if you get margin the right way, then you're basically going to make a lot of free money. In fact, a bunch of free money safely, which is really the key, safely, which is what made me a millionaire. Or you can gamble and use margin like a moron, getting rich quick and losing money in the process like you're in a casino on a blackjack table, thinking that you have an edge, while in actual reality, the casino boss counts the stacks of cash laughing at you losing your money. As you can see on the screen, I am currently killing it, and a lot of people don't realize this, but I have been using margin for the past 8 years. I'm going to be discussing the difference in risk management that you have to take when you use margin, the strategies that are going to be profitable with margin, how to set stop losses, how to diversify your portfolio, and use hedging strategies properly with margin. So this is basically a masterclass on margin. Get your paper out, get a pencil out. You need to take notes. This is the stuff that finance influencers don't talk about because they're just influencers at their deep core, not actual educated investors with experience on Wall Street and results to show it. I mean, if you look at my portfolio right now, I am doing American Airlines, Airbnb, everything is going extremely well. I'm beating the S&P 500 with less risk. That is the key. I'm making more returns with less risk because it's not hard to make big returns with huge risk. I'm doing it with less risk. Right now, my portfolio is doing extremely well, and I'm not surprised. There are ebbs and flows in the market, but on a consistent basis, I continue to beat it using margin. Right now, you'll see that my buying power is 67,000, but as I will show you pretty soon, I'm actually borrowing over $500,000, and I've never had a margin call. I've never had an issue using margin. So if you think this is risky, the only risk is you don't have enough knowledge to understand how to actually use this. But by the end of this video, you will have enough knowledge and you will say that this is not as risky as you thought. I'll go deep into technical analysis as well because you need to understand technical analysis and fundamental analysis. You need both. I'll be using American Airlines, Alibaba, Tesla, SPY, Triple Q. I really do like the ETFs. And specifically, I love using margin on ETFs because ETFs already have built-in diversification. So you are going to learn a lot why ETFs are basically the best instrument to be using margin with. Another reason why I show you my portfolio and I'm going to be showing you my positions and what I'm specifically running margin on is because I like to put my money where my mouth is. I don't want to just run my mouth and say, this is what you should do. I'm going to show you what I am doing so you can copy and do something similar and learn for yourself how to make free, passive, extra income using margin safely. I've been using margin for years, including during each crash. Like literally in 2020 when the market was going ballistic and everyone lost basically their shirts, their underwear, everything. I looked at my portfolio and yes, I was down. I was using heavy margin. However, even with margin, I was down less than the market was down. And that's what really separates me. People use margin to magnify their results. Yes, I do that. But I use margin to actually magnify my results and reduce my risk. Using margin can actually reduce your risk if you know what option strategies to use, which I will obviously be covering in this video. And just speaking about something that's obvious, you're about to learn something that I didn't really feel like sharing for a very long time. In fact, for 3 years, because, well, A, I thought it really belongs to my Discord clients only, and I didn't really want to share it on YouTube. And B, I didn't think the attention span on YouTube could finish a video on margin without hurting themselves in the process. Because if you don't finish this video and you don't understand how to properly use margin, you're gonna do more harm than good. So please prove me wrong. And C, I'm not perfect, I'm a human, and this is sort of my last secret that I was holding on to. I felt like holding on to the secret would kind of make me a better coach, that I knew something that other people didn't know. But in all reality, if I want to be the #1 option coach in the world, which I believe I am, I need to share everything transparently. I don't need to hold anything back from you. So here we go. Here's my plan. Number one, why margin trade? Why would you use this in the first place? You probably already know. But number two, how do you do it safely? Because, margin's not that hard. Anyone can just get a margin account, just apply for it, get it. But what do you do at that point? Once you do have margin, how do you use it safely? How do you generate income from it? How do you do that on a weekly basis, on a monthly basis? According to my trading strategy, of course, I like to do weekly and monthly income. I don't really buy options. I don't do anything risky. I don't want to, be in a casino. I want to be the casino. I want to collect consistent income. I want to live life based on my portfolio. I want to travel the world. I want to do fun things. I want to rent Lamborghinis, whatever, right? Just have a good time. Not that I ever did that, but it would be fun to one day. I'm just so focused right now on trading and growing my portfolio. So how do you do it safely? And how do you manage margin? I mean, using margin is cool, but how much margin do you use? We'll be talking about that because essentially you don't want to use too much margin. I see people going crazy with margin using 100%. I use margin between 20, 30, or 40%, and it really depends. And we'll talk about the best stocks to do that because you don't necessarily want to use a lot of margin on risky stocks. You want to use margin to amplify the good stocks that are already making you profits and income. And if that income is stable and consistent, then using margin to get more consistency to magnify that is going to work. Number 5, we're also going to talk about the best platforms to use margin on. Okay. Number 6 is how many stocks to use margin with. I mean, is it just one stock? Is it your entire portfolio? What strategies? Is it just covered calls? Is it selling puts? Is it, crazy stuff like butterflies? Butterflies are very attractive for the get rich quick people, but how do you grow a small portfolio safely without, all the risk? Then we're going to go over technical analysis. I'm going to look at some charts and give you some entry points because if you don't know how to enter a stock for a proper price, it doesn't really matter if you know how to use margin. It doesn't matter what strategies you use. You need to use margin to amplify what's already working. So for you to understand what's working, you obviously need to understand technical analysis and where a stock is in its life cycle. Is it cheap? Is it somewhere in the middle? Or is it expensive at this time, which means you would probably not want to do any bullish strategies if it's already expensive. Then we're going to talk about fundamental analysis. How do I actually look at a stock and say this stock is worth buying or this stock is way too expensive? And I have a lot of tricks on that because after working at Goldman Sachs, I did a lot of analysis. I mean, that was kind of my job. I also had a job as a quant, so I did a lot of research on technicals. But what I really do believe that Wall Street uses is actually not technicals. They actually do look at fundamental analysis. They want to make sure that a company makes sense because company that's like, say Tesla has amazing technical analysis and it's going upwards. But the problem is if it's not worth what it's producing in cash flow, then the technical analysis doesn't necessarily matter unless you're a short-term trader, which I am not. I'm a long-term option investor. I want to make consistent income. And I guess I do sometimes look at the short-term picture and the medium-term picture, but I always use fundamentals because if a company is completely awful with fundamentals, then maybe that's going to give me an idea to do some bearish strategies. If it's really like a value stock, but it's also growing fast, then clearly I may actually do some buying strategies like, call options. It really just depends. I'm going to teach you all of that. And then once you learn everything, you still need to diversify because even if you found the best stock and let's say you found Tesla in 2020 before the run up, you still don't necessarily want to put all of your eggs in one basket, especially if you're an older man, 30, 40, 50. You probably want to depend on this income. You want to make sure that you don't lose your hard-earned money because the fact is if you're 50, which a lot of my clients are, they've been working their whole life. Whatever they save, they need to grow. They cannot afford to lose it. I mean, that's money they've been working for decades. So they need to diversify. Even if they found the best idea in the world, it doesn't really matter because diversification will help you from losing all of your money. I mean, think about it this way. If you had $1 million, would you take a 99% chance to make 100 million, but there's a 1% chance that you'll lose it all? Sure, that's a fun bet if you're young, but if you're 70 years old, you're not gonna make that bet. Let's be honest. That would be a silly bet to take. And I might be exaggerating. Let's change it from 99 to 90. If there's a 10% chance that you might lose it all and you're 70, makes absolutely no sense to take a risk for something that you want with something that you need. Number 11, I want to talk about safely making money using margin, really getting down to the nitty gritty because sometimes things don't go in our favor and that's where we will discuss rolling and adjusting positions. So if we have a covered call and that covered call is in the money and we don't want to stop making money, we might want to roll it up. And I'm going to show you an example of that. And then I'm also going to discuss all of the option trading strategies that I have used margin with. because there are strategies that are more suitable for margin, and some other strategies are completely not suitable unless you're just looking to make a Hail Mary play and potentially lose all of your money. I don't think you're in that category. You're probably not watching my channel if you're a gambler. And then 14, we're gonna go over a lot of examples, because the truth is using margin is not that straightforward. And that's another reason why I didn't really wanna cover it on my YouTube channel, because there's a lot of nuances there and people can get really confused. But I'm gonna do my very best to explain to you in the deepest detail how to use margin and actually show you examples, because I want you to take action. I don't wanna just blow smoke up you know what. I wanna give you actionable insight. And the last thing is how to use margin correctly. And if you use it correctly, it's almost guaranteed that you're gonna make more money free, okay? But again, you probably already know this. I'm not a licensed financial advisor, and this is not advice. I worked in the field and I'm worth more than 99% of all the financial advisors. But again, you still wanna be super safe, especially when using margin, because obviously margin is risky. With all that out of the way, here's what I've been doing, okay? I use Robinhood. There is a link in the description for opening up this brokerage. You probably already have it, and I don't really like affiliates or anything like that, but Robinhood did reach out and give me a really crazy deal where if you use my link that you get a couple of free stocks. But the thing is, the reason why I've actually stayed on Robinhood is they make it extremely easy to use margin, okay? I got approved a long time ago. I think I've been on the platform since 2015 or 2016, something crazy like that. And essentially, I've been using margin without getting charged for it. Now you might be thinking, that's crazy. How do you use margin without getting charged for it? It actually depends on the strategy that you're using. Some strategies will allow you to use margin without actually having to pay any margin interest, because you're not actually having the stock and you're not actually having the shares in your account. So certain option strategies will actually not even charge you, which is why I've been saying I've been using margin for free. Essentially, it's cost me nothing. I use $500,000, and if I go to my account and I go to my Robinhood Gold, so I've been a member since 2021. Before I was using TD Ameritrade. So I have another TD Ameritrade account where I do some boring dividend investing, but I also do use margin. But you'll see right here that if I scroll down, I'm paying $5 a month, but I have no interest, absolutely none. And when I count up my position, which you will see right now, 1.464 and 602, this looks like I have $2 million. And Robinhood is actually not showing the full amount of margin that I have. The way you actually count that, and I'm gonna do it a little bit manually right now, but you'll notice that I have so much money in margin that it's ridiculous, okay? So here's the thing, here's how you actually count, because most brokerages won't actually allow you to know how much margin you're using. It's actually very confusing. And the reason for that is they're not on purpose trying to trick you. But the thing is, if you see right here, it says 67,000, okay? And if I go to American Airlines, you still see 67,000. But if I go to Trade American Airlines options, it says 33,000. So what's going on here is that there is a margin requirement. And actually every stock is a little bit different. So if I go back to American Airlines, you can see here how there's an initial requirement of 50% and a maintenance requirement of 25%. Now 50 and 25 does vary. So if I go to Oatly, although I really like Oatly, it is a small cap company. And for that reason, it is actually considered to be more risky. Despite the implied volatility not being that much higher, it's really not. It's about the same actually as American Airlines. So in my opinion, this doesn't make sense. However, I do believe that this is decided based on rules and regulations. So not sure if it's the SEC or whoever it is, there are rules and regulations that brokerages have to follow. Hence why common question I get a lot is, how do I get level 3 option trading? And I always tell people, it actually just depends on the brokerage. They have their own algorithms. So you just want to be smart on how you do your application. I'll leave it at that, right? You get it. So check it out. There's a 100% initial requirement here. So this is going to give me much less margin capabilities. Whereas if I use SPY, I do believe SPY still has a 50% maintenance. Yes, it does. And that's totally fine. But what I'm trying to get at is this really does vary. It really just depends. So now with that being said, I just want to do a quick tally of how much I actually have, because I'm actually not sure. And I'm actually curious, how much do you think I'm using? I said 500K, but I'm not fully sure. So I'm going to do some rough math right now on screen. And you tell me before I do this math, how much margin do you think I'm actually using as a percentage of my portfolio? All right, so as you type that, and of course, as you hit that like button, because it really helps me create more content like this, I'm doing my very best to be as transparent and as educational as possible because I really care about your results. So leaving a like really helps me. And of course, subscribing with notification. But let's do some math, okay? So I'm gonna go right here, and I'm gonna go to my total equity. If you'll notice right now, there's 1.24 million in SPY, 159K here. So when I combine that, that's about 1.4 million, okay? And the rest is not too much, but let's just add 100K here. So that's about $1.5 million. Okay, so 1.5. This is another 6 grand. This is probably a few more thousand, but here we go. We have another 16 and 9,700. This is not that much. Let me just get to the big dog. Let me get to the position where it's gonna be clear that I'm using margin. And here it is. Here's a very clear position. I have 20 cells, QQQ 301. This right here is a $600,000 position, which already puts me at $2.1 million, okay? This position, this option itself is already proof that I'm using margin. I already have more invested, okay? But that's not it. I'm still using more, okay? So I still have another big position, I know, somewhere on SPY right there, okay? So 15 contracts times about 400 is another $600,000, okay? This is, maybe 500. So I just did the math and it's actually $582,000. That already puts me at like 2.6 million. So I'm already at 2.6, and granted, I don't have that much more. I still have some more options that I'm using margin on, but I think overall, the number is 2.7 million. And I only have an account of $2,066,000. And by the way, this year has gone phenomenally. I'm up $200,000, 10% in the past 3 months. So that's going really well. But 2.7 divided by 2 is essentially about 35% margin. So the safe amount of margin to use, in my opinion, is about 30%. Now, where did I learn this? So actually, I didn't really learn this from Goldman Sachs or my education. I was actually reading a research article by Yale economists that were basically saying that since markets go up over time, and especially every 10 to 15 years, the market is almost never down. Even if you pick a random rolling 15-year period throughout history, even the worst time, like 1929, when there was like a Great Depression, you are still up over 15 years. And for that reason, if you're not retiring in literally 1, 2, 3, or 4 years, and you have some time horizon, it is silly not to use margin because the market rises. In fact, the market is basically always going up. And I just wanted to pull up this image, just went online, right? And I went up to 120-year history of the market since 1896. As you can see, there are some really hard periods, of course. I mean, one time there's a 25-year recovery, which I guess contradicts the 15 years that I just talked about. But the thing is, this means that you never added another dollar. But if you did some dollar cost averaging, even if you put $50 a month, right? Something super small, you would average your cost a lot lower and you would break even a lot faster than 25 years. So even the worst period is likely less than 15 years if you were dollar cost averaging. And I am not factoring in also using options for hedging, which we're also going to talk about in this video. I'm not factoring in creating income with covered calls or selling puts to get in, or dollar cost averaging. So the truth of the matter is, even in some of the worst times, like even during 2008, and by the way, I'm going back to 1929. This is literally 100 years ago. If you look at anything in the past 50 years, the longest recovery is literally just 6 years. And if you're dollar cost averaging, using options to hedge, the true amount of time it is to recover is like 2 years or less. I mean, for me, I was investing very risky during 2020. I had a whole lot of Tesla. I was not following any safe risk management practices, and I was not following a lot of rules that I'm going to discuss in this video and that I teach my clients at the moment. I was just basically 100% Tesla, and it was kind of dumb. But at the same time, I did a lot of research, and I was very confident that Tesla's going to rise. I mean, I was very certain on it, and I was willing to take a risk, and I guess my risk paid off, okay? It was a little bit dumb, but also I did my research, and that's kind of the moment, that was the season that I was in my life. I wanted to be more risky. But even though I had a lot of Tesla, and during 2020, we obviously had, the pandemic and everything, we had a huge crash and my portfolio must have lost $250,000. In that same year, I actually made all of it back. It was incredibly easy because, well, the market recovered, and as soon as it shifted, I made so much money using options. So even if the market ends up pulling back you can make it all back if you know what you're doing. All right, so we discussed that I'm using 35% margin, okay? But how do you manage margin? How do you, put it to work? Well, here's the thing. You want to pick high quality stocks to use margin with. That's pretty obvious. Now, my number one rule is I don't really buy options, and I'm certainly not going to buy options using margin. It's completely silly. So when you're buying options, you're essentially already making a leveraged bet because, well, check it out. Let's go to SPY as an example, okay? So trade SPY options. All right, so check it out. If I buy a call option, say that I go out 7 days, okay? A call option basically means that I get to own 100 shares and bet that it's going to rise, and I get to pay a fraction of the cost. So for example, if I bought 100 shares, this would be $41,500. Now, most people don't have this laying around, even if they're doing pretty well, even if they have a successful business, they're an older guy, 50, 60, and they have $1 million portfolio. They still might not have $41,000 just laying around. So option buying is very attractive, but the whole point is that it's already leveraged. So right now I can buy this option for $231 and I can essentially own 100 shares, which is $40,000 worth, okay? So with a small amount of money, I am controlling a large amount of shares. Now, I can lose a whole $231 here, the entire amount that I pay for this option, okay? So using margin to buy options is silly because it's already leveraged. Why would you use more leverage to be using more leverage? Okay, a lot of people ask me, do you like triple X leveraged ETFs? And my answer is no. I don't like using triple leverage ETFs. I don't think you need to use leverage to get rich, okay? But I do think that you can use margin safely to get rich. And the example that I give is if you have a business, say a pizza shop, okay, and you have a line out the door, 50 people, and you're making awesome pizza, Neapolitan or deep dish Chicago. I've never been to Chicago. One day I want to go. If you're from Chicago, maybe we can have some pizza. But, I also plan to visit New York. So if you're from New York, maybe we can also have some pizza. But let's just say you have a pizza shop and there's 50 people out the door and you only have one oven. You are crazy not to borrow more money from the bank. Let's say you're completely broke. Still crazy not to borrow money to open up a second oven. Come on now. You have a line out the door. So it is going to be a good move to borrow money, which is essentially margin. And what you're doing with real estate, if you don't own your house and you have a mortgage, you're also using margin. People use margin every day in their life. They just don't realize it. In business and real estate and mortgages, you are nuts not to take a loan and to open up a second oven so you can make more pizzas and serve more of your customers. And that's the same exact way that I see margin trading. If you can use margin to basically make more money safely, and you know that you're going to make that money, then of course you should use it. But you should not use it on buying strategies because buying strategies are already leveraged. And they are in fact super leveraged because you're only spending $231 to control 40 grand. And that's why there's a huge risk, and that's why people that buy options typically lose. I mean, I think 80% of option buyers lose, and all my clients come to me saying, I bought options, I had lots of success my first month, and my second month was a big loss, and I lost everything I made plus some more. And I'm not surprised. It's because it's basically a casino, and that's exactly what happens when you play blackjack. You might win a few hands, then you might lose a few hands, and then by the end of the night, you kind of realize, well, I lost more than I made. So what strategies am I using? Well, I am actually selling puts on margin. You probably already realized that because as you can see, I currently have American Airlines where I sold a put option at 13. I have Alibaba where I've made $184. I sold the 87 put at the moment. Again, if you're watching this in the future, what I'm teaching you doesn't change. So you can watch this anytime in the future and still have the same benefit. Disney, I literally opened up a Disney position today in my Discord because I got a question about it. And Disney is not really profitable because the implied volatility is low. But guess what? Because I'm selling a put option out of the money on a safe stock using margin, it's free. So I don't really care if I make $35 on $9,000 because the $9,000 is free. It doesn't cost me anything. And the reason for that is because when I sell a put option, it's an obligation in my account, but it's actually not shares. So I don't have to pay any interest because all I'm holding is a put option that I've sold. It's an obligation. But at this point in time, it's not actually in my account. It's just an IOU or a contract that says, I will take your shares if those shares go down. So yes, I'm ready to buy them and I'm ready to buy them on margin. And sure, I will pay interest if I do get put the shares. However, that's where we're going to talk about rolling. But first of all, going back to Disney, it's very easy. It's a no-brainer. I'm selling something for $9,000. Yes, I'm only making $35, but if I know my chances of making that $35 is like literally 95%, and even if I do get put, I like this stock and I can start running the wheel strategy, which I recently made a video about. I'm going to link it in the description. Super important to know the wheel because I basically run the wheel using margin. But if I get put, not a big deal. I'm going to run the wheel strategy. But guess what? Usually I don't even get put because I'm using technical analysis to know where the stock would be cheap. Essentially, where is there support for the stock? If the stock goes to this level, it can happen, but it would be very unlikely. And if I'm at a risk to get assigned, I'm going to roll the position down. I'm going to roll away from the strike price and go back into my safe territory, okay? So, I'll show you what rolling looks like in just a moment, but I want to go through some more of my positions because I think you can just copy and do something similar. But of course, you want to fish for yourself. I mean, a lot of my students just look at my trades, they copy, they see what I'm doing, they mimic it, but I also do like when they tweak it and they say, hey, I want a little bit more risk, or hey, I want a little bit less risk. I love that. I love teaching people to be self-sufficient and independent. My goal was not to hook people for life and to make money on them. Yes, I like being a coach and I do make really, really good money, but I just love doing this and I like seeing people get results, because when I started getting results as an option trader and I finally got to leave the United States, not that US is bad, but I really wanted to see the world. I want to travel more. So for me, it's amazing because this is where I found my financial freedom. And just to show you, I have lots of puts, and that's actually my favorite strategy. Selling puts. If I do get put, I run the wheel and I do covered calls. This is my top strategy for using margins. So in that case, I guess not too much changes because I'm still using margin on the strategy that I'm running. But there is a special way that I'm using margin on specific stocks, okay? This is a strategy that you can basically put a couple $100 in, and a couple $100 can actually give you a couple $100.